For investors investing in cannabis, the last month and since elections has been confusing at best as prices have run higher. But Canadian stocks, Canadian cannabis LPs, have actually moved stronger and have better returns than the US names. So what gives? I think you have two dynamics at work. First of all, much as they were on the way up, the Canadian cannabis names are a proxy and were a proxy on the way down when for 18 months the industry was a place to be actually selling stocks. And there was a lot of reasons for it. We won't get into it. But a number of these Canadian names came into the US election cycle actually oversold. And a number of the big companies, like a Constellation owned Canopy Growth, which is the largest market cap in the space, but sits in Canada and has US exposure, are names that I think for a lot of investors, especially US institutions, they are able to access this stock. They're very comfortable with management. They're very comfortable with the balance sheet. And at a time when cannabis is catching a major bid, and it's an exciting time to be a cannabis investor, you've actually seen some of the Canadian names actually outperform. And the other part of it is the sheer outperformance of a lot of the US companies going into elections. So to be clear, look at Trulieve, up over 150% year to date, or TerrAscend, up over 300% year to date. These stocks have rallied very much going into elections and their third quarter numbers. And as we've seen, the outperformance since that point is a function of some of the US names needing to take a breath. And that's why investing in cannabis is as much about understanding the fundamentals, both bottom up and top down, but really understanding fund flows and understanding some of the momentum in the market. So at CNBS, RTF is active, and we believe active management in the cannabis sector, where being thematic is also a big part of what investors want. They want exposure to this high growth sector. But I think you want to be investing with someone who's certainly investing in the middle of the sector, is involved in the sector, is meeting with company management teams daily, but also understanding where we can get the best of the markets that we can invest in. So the best Canadian LPs and the ones like Canopy Growth, where we think the management team is very strong and their exposure to the US, which is this great marketplace that we love, is very strong through their acreage deal and their TerrAscend transactions are places they have great exposure. Investing in names like GrowGen or IIPR, which are US listed NASDAQ names, allow us some of the ancillary exposure. And this is great. There will be IPOs coming in the next 3 to 6 months that will give us more opportunities, and we'll be there for them. We don't have to necessarily wait for a rebalance. So I think active management in cannabis is critical. And I think our ability to really pick from the best of what's around the world is part of why you've seen this really disparity between the performance of the different cannabis ETFs. Ultimately, our view is that we want to be investing in the stocks that we know have not only the best fundamentals, but the ones that have the most exposure to institutions who might be looking to invest in the sector and maybe only can invest in some of the Canadian names or the big listed US names that are not plant touching, but great ways to get exposure to the sector. So the key is balance, the key is active management. This is an industry that will continue to evolve, and an active strategy in a really exciting thematic strategy is, we think, the best way to manage your money.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.